the Iran war, its effects on real estate and Bay Area in particular. So I have done this coverage a few times in the past. When the Chinese currency crashed one time, back in about 4 or 5 years back, the Ukraine war started 2+ years back. All of these events have a big impact on housing. But when I went through these events, I saw a crazy pattern emerge. And that is, right when this event happens, a war happens, the real estate market kind of takes a beating. You might think, oh, the market is crashing. But it goes down and it suddenly comes up like a V. And so I'm going to analyze what the effect of the war is on real estate in general and particularly for the Bay Area market. So, when this war happens, it's got a huge impact on the market. It's a geopolitical event of a very large order, and it has a tremendous impact on the supply chain, because the moment they are going to cut the Hormuz channel to where 20% of the world's oil flows, and the oil price, they're burning down a lot of oil refineries, oil wells, everything is under attack. So with that, the one big component, oil, is completely getting bogged down. And so we are going to see a substantial increase in oil prices, and hence we are going to see a jump in inflation on property prices. So these things are going to happen. But now let's come down to specifics. The first and foremost, the biggest thing that happens when an event like a war happens, and look, here is what is different this time as compared to what happened in the past. In the Ukraine war, the war was being fought not on the American soil. That war was being fought in Ukraine. So we did not get a direct impact of that here in the US. But this time, US is part of that war. Of course, it is being fought on a very distant land, but yet we are going to see the impacts on the US stock market and how the economy is going. So there is that difference between the other events that we have seen in the past versus this one. So when this happens, it shakes people's mindset. And when it shakes people's mindset, it sets or triggers a stock market volatility. And the moment the stock market goes volatile, like yesterday the market was down, it was Monday. So by the time I finish publishing this video this Friday, maybe the war would have stopped. Or maybe it is going to continue even after that. I don't know, we don't have any forecasts on it. But yesterday the market was down like 600 points initially, and then it recouped some. But today it started with 1200 points down. So between all of these events, what happens is the investors start looking for safe haven assets. And this morning, even gold was down by almost $300. So it is down to about $5,000 from $5,400 that it had gone up yesterday. Now look at these, try to put these events together, this data together, and you will see that people are probably dumping these assets and they will look for something safe haven. And you will see that real estate is generally the safe haven asset. Now the problem with that is that the interest rate is already high, and when people go behind real estate and start chasing the already low inventory in the market, you will see that the real estate prices will go up. And so you are going to see affordability crisis. Mark what I am saying. I am not saying that the prices are going to start tanking. What I am saying is that because people want to invest in safe haven assets, they are going to make their way to the housing. And typically, when they are looking for safe haven assets, they will come here in the Bay Area. What has also happened is that we are at the same time in an AI boom. And that AI boom also has triggered the Bay Area market. So when people are trying to invest, they are getting a double benefit. The other volatility, they are running away from the stock market volatility and they are putting their money into real estate. And real estate here in the Bay Area is already being spiked by the AI boom, particularly the high valued assets. So you're going to see this combination of factors that is going to push the real estate values up even after the war. So that's that. The next effect I would say is inflation. With gas jumping up almost 30% or more, with everything will start costing higher. And because these costs go up, the builder's costs go up. And when material prices go up, you will typically see that inflation trigger and increase the cost of building or cost of housing. So you are going to see that effect also. So now let's talk about commercial. Bay Area has been a favorite hotbed for commercial investment when it comes to events like this. And if you look at San Francisco, the San Francisco market is currently beaten down. And that San Francisco market is actually an opportunity. And we are seeing that happen to some extent. So what happens is that these investors that are shaky, that are moving their money out of the stock market or out of the international funds, they are going to put their money into the beaten down safe haven asset, which is real estate here in the Bay Area, particularly in San Francisco. So I hope you get where I'm going and thinking how I'm thinking about real estate in the immediate term and in the long term. Yes, I am called as the ever bullish real estate guy, but look at these factors. And if you disagree, please comment in the link below. I would love to hear from you as to what you think about it. Please let me know in comments below as to what your impression is about the market in this situation. Thanks for watching. Click like, subscribe, and share with your friends.